Okay, looks like we're live. So let's double check a few things here. Audio levels seem okay. So looks like we're good to go. Good morning, everybody. Welcome to another Engineering the Markets. Happy Monday to everybody joining us. Another trade session for us to cover. So it is September 26th, 2022. Hopefully everybody's had a great weekend. And let's get right into it because I think there's been certainly a price adjustment and a shakeup last week that a lot of people felt in the markets. We were seeing signs of some short-term possible covering starting to occur near some of the June lows. But overall, the momentum has remained inherently bearish. We've seen lots of signs that things are starting to ramp up on volatility. We've seen signs that things are not really relenting in some of our risk indices and readings. And overall, that's reflected in some of the downside pressure we have with the S&Ps. So first things first, let's look at the SPX expected move. So last week, we were looking at approximately $116 expected move. What did the S&P actually move? We moved quite a bit more. We actually closed at about a 1.54 deviation from that. So what this means is the option market was pricing about $116 of movement from close to close. From high to low, we were seeing about a 260-point range on the S&Ps. And the actual move from close to close was closer to about 180. So that would be where your 1.5 deviation comes in. If you're measuring from the lows on Friday, which is where a lot of people saw some of that pain and pressure really entering in, we actually got to about 2 standard deviations. And this is where measuring these moves is not necessarily subjective, but you want to understand the pressure that was felt throughout the week versus where the markets actually closed. It's understandable that when you start to get outside of this expected move bounds in the market, you can feel the market changing. There's a little bit more of a one-sided trade that can occur. And usually on an intraday basis, especially on a Friday, you'll see that one-sided trade really take hold of a market, usually pushing you into these boundaries. 1.5 and 2 tend to be the areas I tend to target if I am looking net short or net long. So all in all, if we look at the largest move and compare it with the expected move, that is about 2 times what the market was pricing. And it's another sort of sample in our larger set of example here that the market is remaining highly inefficient. We are not seeing a great option market for short-term premium selling. We're getting lots of breaches overall throughout the week. And as a quantitative style trader, if you're just looking to sell the expected move on a short-term basis, not saying any further out in time is much different, but on a short-term basis especially, a lot of traders are probably feeling some pressure if they're sticking to weekly series. So I'll kind of continue to reiterate, be extremely careful in the short-term durations, be more of a debit buyer, especially as we see this volatility expand. And until we sort of top out on volatility, be aware that things are wider than they should be. You know, the market's not really paying you for the risk of selling short-term premium, especially with the S&P deviations. So looking into this week, we did see volatility pick up on Friday. The expected move is now about 124 this week, or 125 if we just round up a bit. And what that means is based on Friday's close, we're looking at about a 38.18 topside expected move and about a 35.69 downside expected move. Essentially, we are looking at a range that can easily transpire and move through things like our June lows, which have been the focus of a lot of price-related trading, especially from the bearish side. We're actually looking to see what is the next wave of price activity relative to an existing low. So have those levels if you're looking for what the market is moving relative to what actually transpires. And when shifting over into sort of our topic today, overall this week is going to be one of a little bit of caution, but I definitely am looking for a few opportunities across areas that are starting to get extreme. And with any extreme readings on any particular trade setup, you want to be careful being a little too early. So I'll kind of caveat that with some of the discussion today. There are some things setting up, potentially some high risk, high reward opportunity, and more or less just scouting for some low delta trade in regards to where some of that opportunity lies. So let's take a look at the SPY. Last week, we did come into the area of testing the June lows. I'm not going to necessarily say that we absolutely pegged the bottom side of that candle, but as far as where the June lows closed, that particular price level has been tested. And we saw a little bit of covering on Friday afternoon, especially into the weekend session. As we look this morning, we can see that we're still a bit on the lower bounds of this area. It's not as if we're gapping away from this at this point in time. So remain cautious of any long bias trade in this area. But I will be looking for some of those indications of a possible stronger bear covering rally. Some things that I like to see in regards to that is maybe getting out of an hourly downtrend. So for example, right now the S&P is somewhat contained between hourly highs and lows, bit of an equilibrium look if we're looking at comparing it to the bounce highs on Friday. And some of these technical levels, I'll be looking for clarity. Whether we break higher or lower really doesn't matter at this point. But whichever side breaks, I'll know that the top side potential off of the June lows could be a bit advantageous as a short-term trader. We are a bit oversold. We're a bit far removed from our moving averages overall. Even something as aggressive as a 9 EMA on the daily, you'll notice that the price has deviated quite significantly from this. So on many time frames, I think there is a bounce that is setting up. Doesn't necessarily mean that it's going to have the most potential, but on an intraday basis, I want to be careful fighting something like an hourly uptrend on a daily oversold. It's more about the conditions for today's trade. Same idea with the NASDAQ as well. Coming into those June lows, I would say that most of our market index products and certain stocks in particular, they're highly correlated at this point in time. So instead of looking across for, I'll just say, setups in the market, things that are going to deviate from the market, during periods of high volatility, we're often going to see high degrees of correlation. So what this means is the marketplace on an intraday basis will likely either be very strong in one direction or another. You usually won't see a ton of sector, I guess like a bifurcation, anything that's going to be trading long relative to a weak market. You'll often just see things maybe trading in one favor with some relative strength and relative weakness based on that bearish or bullish connotation. And what this can look like on an intraday basis for those unfamiliar is whenever you have markets that are correlated, you really don't care about the asset that you're trading. To some degree, you can even trade the index products just as effectively. What really matters is, are you in a good position to take advantage of that correlation? Are you in maybe the weakest of the weak sectors? An example on Friday would have been energy, where we saw not only a down market, but the energy stocks in particular were sort of in free fall. They had lost a lot of support coming off of highs. This is true in the S&Ps and then well, NASDAQ doesn't really have energy, but Russell especially, a lot of the lower float, lower market cap energy names were taking some of the largest hits. So same idea whenever the market is correlated to the long side. There might be some days where we see the markets back away very quickly, especially if there's any sort of significant deviation in the tone of what's been going on from a sentiment perspective. If ever that shifts on an intraday basis, those are the days that are often the stronger trend days, simply because the correlation is so high. And part of that is there's a little bit of bullish scouting, for opportunity. As things get more oversold, you often are looking for a little counter trade at certain points in time. To me, it's more about volatility. And I think this is going to be probably the theme for the rest of the week is we're in a new regime in regards to volatility readings. I'll go ahead and start off with the VIX, since that's what a lot of people kind of start learning through. And last Friday, we did see the VIX crest 30, more definitively than a couple of sessions prior where we had a little bit of a spike. Now, whenever the VIX crests over these types of inflection levels, a few things happen. First and foremost, you tend to get a little bit of a rush to start hedging more definitively. If you're looking at things like buying VIX calls, this is usually when, indicators like the VVIX, which are showing more or less the volatility skew of VIX options. This is where these indicators start to really show a difference in what has been occurring previously. You're inflecting around a level that was supposed to be more or less a move away from, but instead we move through. So things have to basically change in that favor. So for VVIX, we saw a massive run towards vol call premium on Friday. This was one of the larger moves that we've seen in quite a while. We also saw our volatility futures definitively go into backwardation. This is more or less that dynamic of trade that's likely occurring under the hood, outside of what the pricing of the S&P looks like. So our October active contract in the vol futures is definitively priced higher than the November, which simply means that the market is perceiving short-term risk as being more impactful than longer-term risk or next month risk. And when you get into these periods, certain things often will happen. For one, any firm that's looking to hedge, regardless of if we move lower or if we do have some sort of pullback correction in the S&P, they're often going to use ES futures to hedge. They usually hedge their vol risk relative to S&P futures. It's a bit of a sort of derivative trade that they usually have ongoing. And we like to observe when this occurs more based around the expected move breaching. So as y'all know, expected move has been breaching quite often. We've seen a lot of Fridays, especially, that are quite volatile. And most of that has been in the face of some volatility hedging along with the gamma exposure that comes into a Friday expiration of any of the option series. So there's a little bit of that dynamic going on. Additionally, since the VIX is above 30, the market is in a regime where we're likely going to be seeing pretty wild trade for at least a period of time. And really, this is just more pattern recognition. You want to note periods of S&P trade that are marked by the VIX coming onto 30 plus levels. These trade scenarios are often pretty challenging. They tend to be gappy. They tend to have pretty wild overnight gaps in both directions. It's hard to trust relative levels. You'll usually find that there's a big volatility box that the market tends to create over time, especially if we stay within like a 30 to 35 VIX. You'll often see that form just over time as you kind of crest into these areas. And if you're a short-term trader, you can often be somewhat ripped back and forth, especially from a directional sense, because you'll get follow through in one direction and then immediately have significant portions of it reversed. You know, once again, that box theory of once we establish a low, usually that volatility kind of remains in that area for a period of time. Now, this is based more on this year's trade and, you know, to some degree, a little bit of November into December trade. Does it necessarily mean that we have to do this time? No, of course not. Ideally, what a lot of people are looking for, since the momentum is already on the bearish side, is for a market to actually collapse. You know, in this regard, this would be where losing the June lows opens the door for not only more significant downside, but faster downside that really isn't countered very often. Low pullbacks, little to no opportunity to get into a trade that's already transpiring, and the idea that the market can expand much lower now that we've lost, in this case, significant support, which I guess technically we haven't lost it yet, but that's what a lot of people are kind of hoping for, especially those who are net short at this point in time, just for it to be a more seamless trade. Some things that may need to transpire for that to happen. One, you'll want to see the VIX kind of continue to rise session after session. You know, we are sparking something relatively new. It's been a while since we've traded a 30 plus VIX. The last time was back in mid-June. So it's when these lows were established. So we're basically back in that same period, same relative price levels, but obviously new information. Sentiment's a little bit worse this time around, and we're coming off of a pretty steep high to low trade, you know, from 430 S&P down to about 360 S&P. That's a pretty significant drop of a relative price. So those are some things to watch out for this week. Volatility is on the rise. As the title suggests, there's been some turmoil given the dollar strength. We've seen lots of significant pressure in the equities markets just based on a strong relative US dollar. But now we're starting to see a little bit more currency issue. And this is going to be more noted in things like the euro, which, if I can find that one, did lose its sort of dollar peg. We were seeing that kind of stabilize throughout most of September. That kind of fell through last week. And that's been kind of a fear trade as the euro is kind of now significantly weaker than the US dollar on a relative basis. And additionally, the British pound, which saw more catalytic driven fear in regards to its currency, but also seeing a significant shift relative to the US dollar. So, strong dollar, weak overall currencies, but to some degree, there's other driving forces that are causing some probably liquidation across some bigger firms, especially ones holding, this high leverage currency trade. There's definitely a lot of leverage in the currency space that can cause these liquidations. So significant moves in British pound and more or less the euro, but you can look across multiple different currency pairs and see that this is not unique to Europe. It's actually something that's been ongoing for quite a while. Whether you're looking at the yen or whether you're looking at, that's the wrong one, looking at the yen, grab the wrong one, sorry. There it is. So US dollar to yen, et cetera, et cetera. So anyway, the reason I bring this up is some of the structure of the dollar market is indicative of a possible parabolic top. The dollar has certainly been a more crowded trade this past year. People have been aware of its strength, and strength begets more strength. Typically, this kind of leads it into price levels that are unsustainable. Usually things have to break before that can change. And we're starting to see some possible signs that things are breaking, around different areas of this trade. Doesn't necessarily mean the dollar's ready to back off at any point in time, but I would argue that last week was a signal that things are getting pretty extreme. We saw an extension here that was pretty much of the same length as when we saw the recovery back in mid-August. So the dollar did go a bit parabolic last week. Doesn't mean it's ready to back away, but I'm certainly looking for that trade to transpire. And if the dollar does start to back away, there might be some renewed interest in something like gold or silver. So your metals department, looking for those to kind of stabilize a bit better, maybe come off their lows slightly, but once again, looking more neutral as the dollar backs away and these have room to breathe. I'd also be looking at other commodity products. We'll look into that a bit more this week. I might even be looking more towards highly sensitive commodity products relative to the import-export dynamic. And for those, having a backing away of the dollar could provide a short-term opportunity for bets. Last but not least, certainly crude would be one that could see some upside just on a dollar backing away. This is kind of your classic inverse correlation between how crude is exported and relative to the currency used to provide that export. So I'll be looking for crude as well as some of the metals to start to bounce. So this week, I guess to kind of round things out, the idea of this market is there really aren't great levels to give you. If I'm looking at the SPY, we've lost so much relative to trend lines, to relative lows, to kind of recovery areas, defendable zones. When we're at the extreme lows, it's more about protecting capital in the worst case scenario. If things do kind of fall off from these levels, the downside is fairly open. There really isn't much in the way of new support for quite a while. We have a little bit of structure based on 2020 election cycles, but ultimately this is kind of an open area for the market. Some things to note from last week is if you're looking at bigger time frames, I don't think I have a yearly here, but can I aggregate? Yeah. Let's just do a 20 yearly. It's worth noting that all of 2021, has been engulfed. If you're looking at how significant has the downside been this year, well, it's like we lost all of last year. There is no more of last year presented on this chart. And to that degree, it kind of shows the significance of the pressure we've been under. Not only has this been a bearish market this year, but the give back has been significant. All that said, it doesn't necessarily mean that there's not going to be new bullish opportunity. We just want to be careful with the hold time. We want to be careful understanding how long does that trade have to transpire and what sort of targeting should we be doing. So for now, given we're testing June lows, allowing the market to sort of crest through it, especially with how volatility is reading. I would even say that as a leading indicator, anytime I see something like corporate debt leading the market lower, I kind of assume that this is what the SPY chart will look like in a couple of days. It tends to kind of, showcase the risk on, risk off behavior of the market. If this picture doesn't change, then you have to assume that we're going to lose it. We're going to have to eventually get through those June lows before seeing any upside potential. And in doing so, where does that possible pivot start to form? Where can we sort of target off of it? And as a bear, where to start considering taking your profit off? Because if you are still holding bearish, you're opening up a new potential trading range below the June low. That obviously kind of opens some new opportunity, but the worst thing would be obviously to see a recovery from it, more bullish bounce behavior off of another key level. So be careful entering in too short this week. The bounce potential is relatively high. Watch out for correlated markets. In a high vol environment, you're going to see high correlation, more on an intraday basis, but it can kind of show throughout the week. I'm looking for the dollar to back away a little bit. That obviously sets up new trade. And if you're wanting to maybe time some short-term long opportunity, one, it'd be ideal to have at least a signal inside of a price activity candle, but you might also be looking at things like corporate debt to maybe set up once again. And as I remind, this is definitely not a trade to be too early to. The floor is open quite a bit. Allow these moves to kind of transpire and maybe get to the most extreme they can. And that's usually when we see the mean reversion, even if you are looking short term back to moving averages or just back to levels where new opportunity can be found to the downside. So be extremely careful just stepping in too late. This is a move that's been transpiring for a while. You don't want to be chasing it too much at this point in time. And pretty much that's it. I'm going to let pre-market prep kind of take over from here. Trade safe today. We'll talk a little bit more in depth how to strategize tomorrow and Wednesday as I kind of collect some ideas for the week. But really be aware of some of those characteristics and don't let them surprise you. It's definitely a market that correlation takes over. That can be surprising to some, but really it's just a dynamic of the market. Allow yourself to take advantage as opposed to, being in disbelief at times. So trade safe and we'll talk more then.
I think we got it. Good morning, everybody in the Bear Bulls trading room, and good morning to my partner in crime here this morning, Thor. Thor, good morning. How are you?
Hey, good morning, Peter. How's it going, brother?
I am fantastic. I imagine you are doing pretty good. We had this weekend the great battle, the fight between Florida and Texas, between Thor and Mike, between the Jacksonville Jaguars and the L.A. Chargers, and with oh my God, with authority, I gotta say, Jacksonville came out on top. So, gotta make you happy this morning.
There's a real problem here in Jacksonville, which is we don't actually know how to handle winning. So far, everyone's just really, really shocked. It's kind of like when you're gambling and you just kind of like win and you weren't expecting it, and all of a sudden you're like, so what do we do now? We've been doing this for such a long time. At this point, I still think we're all saying, hey, there's plenty of time left in this season. Trust us, we're going to ruin this.
I figure people would be out like burning cars and like having fun and
Now,
no
I tell you what, they're
pandemonium.
looking good. We're really happy with our defense. I think is the big thing that's really got us stoked right now. The D line's been stepping up, and we're gonna keep an eye on them. If they stay healthy, we might have a shot.
My camera's looking very fuzzy. I'm not sure why it's not crisp this morning. All right. Anyways, well, football aside, we have some markets to talk about because we can see the list is starting to get longer. When I was dialing in earlier, we only had like three things on the list, but a couple of tickers gapping up, a bunch of them gapping down. Overall, we've got what's a little bit of a sort of a downward and but muted market so far this morning after last week, which it's funny. Last week, Thor, I don't know how you experienced it, but for me in my trading, I noticed like I went into, I think, at least three, if not four, of the days last week saying, there's really nothing to trade. I'm not sure what I'm going to trade. But then opportunities presented themselves. But then, in the morning and then the afternoons all go flat, either because we're waiting for somebody to say something crazy that you're going to have to react to, or the markets were just sitting sort of without much volume waiting. So we'll have to see what this week will bring for us. And
Yeah, 100% there, Peter. I mean, I agree with you. I think there's been a lot of indecision in the market. I think the Bears are in a good profit zone, so I think they've been taking profit, but I don't think there's any conviction in the Bulls yet. And I think everyone's waiting for some, big outstanding thing to jump out there. I mean, we've got stuff coming onto the gappers already because I mean, we've had some real pressure. I mean, you got even going across the seas. You've got Britain kind of threw a gamble out there to spur growth. They did some unfunded tax cuts, which has caused an additional inflation surge over there, which has got sterling and U.S. Or U.K. government bonds up. So this is just creating a lot of pressure. U.S. dollars already up around. We got sterling up around. So all of these hedging mechanisms and all of the, anywhere anyone's going to try and find a hedge or a place to give them confidence. Where can I stick my money? You know what I mean? They're having a lot of trouble finding that. So it's starting to create a lot of angst and a lot of indecision in the market. So, and it's been really interesting. We've got, China doing it a little bit different to try and rein in the yuan against the dollar. They're trying to raise their foreign exchange rates in order to try and, to try and help their currency. But we've basically got recession looming across the globe right now. So, we've got Fed raising rates, everything's going up. So I just don't think we're doing that. As we approach the third quarter, the S&P is in the red for basically 3 months now. So, and this is the third time, only the third time since '08 that we've had consecutive quarterly losses like this. So again, another thing to really make people pay attention. So with the weakening growth forecasts, downward pressures on commodities, I mean, you've just got so much stuff going. Gas prices being the opposite. I mean, there's a lot of stuff going on here. As far as announcements go, we've got the Chicago Fed Manufacturing Index is coming up. We've got Boston Fed President Collins speaks at 10, Dallas Fed Index at 10:30, Atlanta's president speaks at noon, Dallas Fed President Logan at 12:30 and Cleveland Fed President Mester at 1600. And then I just wanted to throw out a couple of notable other items as we get ready to break down our watch list, because I think you guys are going to find some of that notable. One thing you saw already was that we see like LVS jumping up. I think you're going to see Wynn and Caesar, because there's some word out that Macau, which is one of the largest gambling areas in the world, is starting to reopen and allow touring and some other things to come in. So if, we could see a little bit of they're easing some of the COVID stuff there, because it has been basically locked down since the beginning and has not quite gone back up yet. So we could, maybe that'll be enough to break in there. A couple of other just little things. Netflix principal accounting officer Ken Baker just resigned after only 3 months. Filing said it was a quote unquote personal decision. We will see. Other thing, XPEV chairman Zhao Peng He just bought 2.2 million shares so at an average of 13.58. So taking his stake to 20%. Always interesting when a chairman starts buying a lot of shares in his own company. And that on the back of LI kind of having a lower delivery guidance. So a couple quick broker reports. Keep an eye on BP, downgraded. Fitch has been downgraded, and Lyft has been downgraded. So we've got quite a few things starting to hit out there.
Oh my goodness, you've got news from all over the place. Okay, well, I see a couple of those.
News report.
Yeah, exactly. That's good. That's what we're here for. We've got a couple of things, a couple of those I see hitting the gappers. Some of them haven't yet showed up. Some of them, by the way, are trading on the New York Stock Exchange, which means often they don't gap pre-market all that much. Does not mean they won't have good price action and a good trading opportunity once the market's open. So let's see what we do have here in the gappers, and we'll touch on some of those and some new ones. I've got only four things on the gappers list so far, starting with CRHC. And CRHC is 195,000 shares traded, up 8%. It's the biggest gapper so far this morning. This has an 82 million share float, so it's not super small, but I don't even know what these guys are. Cohen Robbins, I've never heard of them. Any idea who these guys are and why they're gapping, Thor? I can see them looking.
Them right now. Let's see. The last news they had that I'm seeing was on the 23rd. Something about a SPAC deal. Let's see. I'm looking in. Karstoff says I'm too chipper to replace Norm. That's funny. I would never do such a thing. Let's see. Plus, Norm's way better at finding news than I am. Quicker.
Yeah, we are much mere pale comparisons to the normal crew here. Without Carlos and Norm, we would appreciate, by the way, if you give us a thumbs up. That would make us just feel a little better as we sit in for the pros. Not here today. I'll be here all week. Thor's going to be in a couple of days this week, I think, helping out. So, but we'll get you through this and get us
little thumbs up. If you got to view it as charity, it's okay. We don't mind.
That's right. We take charity. All right. Well, looking at the chart, the volume so far this morning in CRHC is very spotty. I don't like the look of the pre-market, so it doesn't look great, despite the fact that it's got some volume. I'm not sure where it came in because there's really not much that I can sort of see this morning. The daily chart looks interesting, though. It was super flat, and then about a month ago, at the beginning of September, look at the movement that has started. So CRHC really started to get some movement. But that being said, look at the volume, how much it dropped right off here over the last couple of weeks. So it's moving a little bit more, but like some days most days it only had 100,000 shares traded. So I mean, we're already at the daily volume for this. So maybe CRHC will move. I don't love it. So I'm going to put it down here just in case we don't have enough things to fill out the roster. But for now, we'll push it aside. LVS is on the list. Now, Thor already mentioned that with some news coming out of all of our gambling sort of stocks and gambling resort related stocks. So I already mentioned that. It's up 5.8% on 200,000 shares. Daily's been pretty choppy, but if we can get some strength and sort of get towards the top of these levels, it might be interesting. So far, pre-market doesn't look fantastic, but it might pick up as we get closer to the open. I mean, we still have a good 50 minutes almost before the market's open, so we'll see where that one goes. XPEV, Thor also mentioned, I think with the chairman buying into it, so I presume it's a he, but anyways, thinks that it was good at this level, and who knows, we may see some upward motion. We got 770,000 shares with a 3% upward gap. The fact that it's moving against the markets could be good. And it's been a fairly good mover, so I'll leave that on the list. I did add LI to my list since Thor mentioned it as well, and it can often trade, but it's not on our gappers. And the last I've got here is JD, which is a little bit of a surprise. I know that some members, and even Brian in the morning likes to trade JD occasionally, but it doesn't often gap pre-market. It's just over 2%, which is the minimum for us to, for it to be on our list. With 195,000 shares. I don't know, Thor, if there's any particular news on this, or it's just getting a baby bump.
A baby bump.
Wait, that doesn't sound
I'm
right.
checking out that right now. I was looking up another thing, and then I started lagging here for a second. But I'll check that out. I did find the news on what was it? CRHC. Basically, Alwyn AG and Cohen Roberts Holdings have mutually agreed not to proceed with their earlier proposed business combination. So it was a decision to not do something.
That's weird.
Has apparently brought a little life to the stock. So it might
that's
have
odd.
been
Usually,
that decision that got it going in the first place a month ago when you brought up. There's probably news of that potential decision.
Well, that's odd, because normally when you get a merger, that's good news for a company. Apparently, the market did not like that news because it did drop at the original news then, and now it's popping up when it's called off. So, okay, well, there you go. Anyways, JD, as I said, I don't see anything particularly exciting on the chart so far, despite the fact that it's gapping up here a little bit. Maybe I'll put it down here in the secondary, and we'll come back to it if we need to.
So I think what I'm seeing basically on JD right now is its range. It's being evaluated, it looks like, and investors have been found heavily searching JD.com just through ad searches and browser things. Something that's starting to appear a lot is you actually have folks out there that are actually buying data from Google and these other places to see what tickers are being searched the most. I forget his name, but there's actually a famous trader out there who does what's basically called meme trading, and he only trades off of high volume. But JD right now, according to analyst recommendations, which you can find on tradingterminal.com, which is where I've been pulling most of my news off of this morning, the analyst recommendation right there has been moved to a strong buy. So I think you have some bargain hunters that are looking for some potentially good deals, and I think they're starting to view stocks like Alibaba and JD and XPEV, Neo. A lot of these Chinese stocks that are pretty beaten down are starting to look like good potential. So we'll have to see what happens, but that seems to be what we've got going on here.
Okay, there you go. Well, let's get to the, I've got it on the secondary, so we'll keep it there. And let's go to the gap down list. We got a few more things sitting here, starting with Bluebird Bio, which is down 5%. Very low volume, though, just over 100,000 shares, which gets it on our list. Let's see, it's got a 75 million share float, so small, but not super small. Pre-market action doesn't look terribly active. I don't know why it's gapping down here particularly, but I think this would be the type of thing that normally Carlos would call a no.
Yeah. Right now, one thing I like to do as well as a day trader is I always like to kind of see what the analyst recommendations are. And if it's a neutral stock, I tend to not play it, because if they're not thinking it's going to go anywhere over long term, probably not going to trend very well in the short term as well. So you kind of have this $5 stock spreads, okay, I guess, but not really going anywhere, and it's on a neutral bias. So yeah, I think we're going to have a lot of stuff moving around today with more potential.
Well, we could. Well, let's move on here on our list. Farfetch Limited. Now, I know this has been traded before. FTCH. It's 300 million share float, down 5.7%, just over 200,000 shares. Daily actually looks interesting if it gets down below this range, but it is an $8 stock. Definitely one that our good buddy Norm would not like. I don't know if there's any exciting news on Farfetch Industries, but it is not exciting me so far this morning.
Yeah, broker reports on this one show Citi initiating coverage on Farfetch at sell, so it's setting its price at like $6. So basically, Citi came out and said they're going to start tanking this thing, and they're willing to take as low as $6 on it to get out of it. So which is causing the entire market to say, okay, we'll wait for $6 to buy it. So it looks like at least in the short term, Fetch is going to see some downside pressure.
Again, put it on the secondary down here. All right.
Yeah,
Fro.
I have not really had a lot of success trading Fetch, and for the record, it's kind of getting into a price range I really don't like.
Yeah, it is getting low there. Once it gets below $10, it gets harder to trade, often anyways. So FRO is almost in that bucket. It's down 3.6%, barely over 100,000 shares traded. Again, pre-market action looks bad. I would just say no. Lyft is on the list, gapping down here. I don't see sort of the sister. Usually Lyft and Uber are generally moving together, but Lyft is down 3% on almost 200,000 shares. Again, it's sort of heading below this low level that it set right at the beginning of September. It's got some room to move downward, but I imagine this is just moving with the market unless you find some specific news on it, Thor.
So yeah, Lyft had a broker report come out from UBS, and they did kind of an interesting thing. They actually they downgraded it to neutral from buy. So they're basically saying they don't think it's really going up here. But the kicker is they lowered their price target from $50 to $16. So that's a really big difference in what their overall projection is for Lyft. So they're not really saying Lyft is going to go down. They actually think it still is going to go up. But instead of going up $20 or $30, they think it's going to go up like $2. So that's causing a lot of, if you're an investor, especially on Lyft, that I don't think Lyft carries a dividend. So if there's no upward movement potential and you don't carry a dividend, then there's really just no reason to hold unless you just feel like tying up your liquidity for no reason. So again, we're probably going to get some selling on Lyft. I would also queue up Uber. Never hurts. I agree with you, Peter. Never hurts when Lyft gets a little bit of action going. It never hurts to look up stocks like Dash, Uber, or any of those other stocks that are related to kind of the, this new post-pandemic car delivery service industry. Whenever one of them hurts generically, the rest of them get focused at.
And Uber, if you don't know already, we like the gaps, or at least I certainly do. And look at this gap we got back here in August. Mm-hmm. So if it gets into that zone, that could be an area of free fall. There's not really a lot of support into that zone, and that's from 27 all the way down to 24.50 or so. So yeah, there's a little room to move if Uber gets into that gap. So
that could be a lot of fun. That could be a good trender once it gets into that gap.
We'll set some levels on that, I think, a little bit later. All right, so moving on. SNY. I don't like trading this. It's gapping down just over 2%, low volume, doesn't look good. I'm just going to move on to BHP, which you heard us mention last week if you were tuning in, is one of those stocks where the industry generally can be good, as an investment play in times. As a trader, as a day trader, we generally don't like it because it just doesn't move in a way that gives you good day trading opportunities. So I'm going to move right past BHP to this BBBY, Bed Bath Beyond, which keeps jumping on and off my list as it's bouncing up and down around this 2% mark here. You know, its price has dropped so much it's down here into it's 650 right now. It's got only 148,000 shares. Doesn't look fantastic. I'm not sure why it's gapping unless you could find some, again, news on it, Thor, for me.
The only thing I've got on Bed Bath & Beyond is that they're only a few days away from their earnings. So they got Q2 earnings coming up in a few days. So I don't know if because it's the beginning of the week with earnings this week, if we've got some people going ahead and starting to either, take some positions or get out of positions, whatever they're doing. I did not. Let me check one other thing. The other mention on this is the short float, according to tradingterminal.com, is 39.6%, which is an incredibly high short float. So Bed Bath & Beyond, which we know is a heavily shorted stock institutionally, which is part of the reason why it has these crazy meme squeezes like it did in the middle of August. Its short float just gets so heavy that any upward pressure causes a gamma squeeze, and then this thing just goes into a rocket, basically. So are we getting near another WSB play on this heading into, earnings? Maybe. We'll have to keep an eye on it. My buddy Hamish, the Informer, puts WSB out there. So might be a little bit of action coming off of them.
Yeah, so and so he's talking Wall Street Bets here, which is the Reddit substream that sort of got all the apes going crazy, and that could be it because I don't see it now on our gappers list, which is interesting, but AMC was jumping up here as well. So maybe the meme stocks are making a resurgence this morning. So look, if you like it, then take a look. I noticed that BBBY is off the list again. As it, as the gap, goes, the gap this morning.
I'm personally just waiting for ape. I mean,
ape.
if we're gonna be apes, can I not just trade ape? Because I just feel like that would be so much more fun. I'm still waiting for history on that one, but it hasn't worked out just yet.
Oh man, you got to give them credit for they're just embracing the whole meme thing.
I love it.
Release an actual ticker called Ape. And for those of you that don't know, AMC Entertainment they made a promise that they weren't going to dilute their share offering by issuing a secondary. So instead, what they did is they started a whole new ticker to raise money from the capital markets called APE. And to me, that's just punching it right on the nose, right? Just to say, hey, we know that this is crazy, but hey, if you're willing to give us money, here's your ticker. We're going to call it APE. Go ahead, invest in it. Give us some money.
And I'm going to not say that I bought any of it because I wouldn't fall for something like that.
There you go. Don't admit to anything. All right. Well, that's our gappers
until it
list.
Explodes to 100, and then I'll say I knew it. Just kidding.
We got a couple of things that are jumping on and off. I noticed Mara and Coin jumped on here, just heading over sort of the 2% mark. So it looks like we're getting a sort of a minor move up in Bitcoin cryptocurrency right now. So that may have some movement today. Again, for day trading can be iffy, but if you like them, go for it. There's one I want to take a look at. Somebody mentioned it in the room, and I know it's a low float, but but Norm's not here to roll his eyes at us. So LVTX up 149%, 4.5 million shares traded today. So this is 100. No, wait, I don't even have it here. Hold on. LVTX. What are we looking at? Yeah, 9 million share float. So this would get Norm's blood boiling well here. But
that's a little heavy.
Yeah, exactly. It's too big of a float for him. He likes them small.
Yeah, and the low float goat ain't here to take care of this one.
Right. But and we make fun of him with that title only because I think he traded a low float once, and that's it. It'll stick forever. That's how the best nicknames happen. So, anyways, but LVTX, yeah, it is definitely moving this morning. Look, if you like the low floats, you may want to keep an eye on it. Again, up 147%. Keep in mind, close on Friday, $2.40 here. So it's up at 590. This, so far it's looking like it's got good volume and could very well move. But this is a hard one to trade. I honestly, even just looking at the chart, I don't think there's going to be many levels on it really. This usually what you do is you just watch the whole dollar numbers and see what it does around them. So if you like the low floats, this morning looks like LVTX is one of the ones to go take a look at. All right, so with all of that having been done, why don't we move over to our community events? Because we have another whole week of activity here in the Bear Bros trading room for you. There's tons of stuff that happens every week. And, well, obviously that is not Norm. That is the lovely and talented Thor. But, Thor, why don't you sort of give us the rundown for the week?
All right, everybody. As mentioned, I am not at Norm BBT. Actually, one of these days, I think I should just start a thing just called Not Norm. I think Peter actually coined that. I'm at Thor Young on Twitter, if you are so inclined. Come by and check us out. We've got a lot of good stuff going on in the room. Every single Monday, you can come by and you can hang out with us. We normally have Carlos in there. We'll have Kyle, who is our famous programmer, just hotkeys and all of that stuff. They can help you with your form, help you get associated, answer general questions, whatever you want. And that's at 8 p.m. Eastern every single Monday. You don't have to be a new trader to take advantage of it, but it's there for the new traders so that you have a place to come in there and do it. But anytime you have a good question, always pop in there. They'll help you out. Every Tuesday, we have what's called Strategy and Trade Book. So we generically focus around trying to dial in our trade books, the different implementations that we're using to add and control risk. This week, we have the man, the myth, the legend, the author of the book that brought most, if not all of you here, Dr. Andrew Aziz is going to be, talking a little bit about some stuff and getting everything put in there. That's going to be at 8 p.m. He's going to discuss how he sets up his trading station at home. He's going to talk about trading while traveling and how to keep, your edge and all that, put it in together. He's going to talk about his monitors, really take you through everything he has. We spend a lot of time on the trading side of things. We often don't talk about just getting you ready to trade. And he's going to take you through his as one of the highest performing day traders out there. I think it'll be super helpful, maybe even flashes Lambos. And then after that, coming up next week, we've got our man, Peter Donnelly. I don't know, we might have seen him already this morning running this little gig, but he's going to be talking. There he is. Peace. He's going to be talking a little bit about, risk management. What separates winners from losers? Psychology, obviously. After that, risk management. Everyone's going to lose. You're always going to lose in trading. That is just an inevitable reality. Peter's going to help you understand how to make sure you keep your losers small and your winners big, right? And that's how you do it. Cut your losers and let your winners run. Peter's going to go through there. He's going to talk about balancing risk. He's going to talk to you about risk versus reward calculations and how to make sure you're in the right spot. Every Wednesday, we go the other direction. We talk about psychology. So we've got Rand Howell talking this time, emotional self-mastery of the trading mind under stress. This is the part you're getting from BBT that, you guys, you just have to have this. You just got to dial in your mindset. It doesn't matter how good your strategy is. If you can't execute it, it's not going to happen. Next week, Mastermind Pro class coming from Dr. Kenneth Reed. This dude, top notch. Just the psychology courses alone in BBT are worth coming by and coming in here every single week just to stop by and check these out. The other classes, the mentoring, all that stuff, sure, which is what we do on Thursdays. But, I mean, this stuff is just crazy. So, like I said, Thursdays, we do mentoring. So, basically, from the start of the day all the way through the close of the day, we have various mentors put in place, from Andrew to mentorship with John Hiltz. We have Ed from Average Joe's Trading Room. He also has The Jungle, another trading room here at BBT where you can go in there. Ed's a master trend trader, really a fantastic risk manager. And also, for a lot of you, he is one of the best people I've ever seen at growing small accounts. So if you're really looking at how to master dealing, handling the buying power that you have. He's a great guy to help you out there. And he comes into the BBT room for that mentoring, right in the main chat room. And then after hours at 8 p.m. Eastern, because we understand not everyone can be here during the day. We got people with real jobs and stuff. I do mentoring at 8 p.m. So come in another spot where you can come by. You can actually interface with a real full-time pro trader and get your questions answered on the spot. All right, a little quick shout out for our BBT replay. This is www.stocktradingsimulator.com. Come by and check it out. Risk-free environment in a money-free environment where you can come by and you can actually just practice your trading, get everything dialed in, and look at that. If you want some strategy and watch list ideas, you can actually put in your email address, our very own. We're not really sure if he's a person or a computer. We just call him AI Man or Amen. He is going to send you homework lists. He'll send you strategy, watch list ideas, all kinds of great stuff coming right to your email. All right, interested in joining Bear Bull Traders? After everything you've just heard me go through, you're still not interested? What else do I gotta say? All right, I tell you what, I'll give you a deal. Discount code PreMarket24, $39, free trial, 7 days. Come in. You can get the chat room for a week, and you get that onboarding session we talked about at the beginning, so you can talk about your platform and questions. Come by, check it out. Also, quick promo I just want to throw out there. Don't talk about it. Dr. Kenneth Reed is now offering free one-on-one coaching sessions. So if you're trying to dial in your brain, get your psychology under control, I really don't know how long this stuff lasts. That he's a really, really busy guy. He'll get a little bit of time, and then he says, hey, I'll take on some help. Make sure READ50 is the promo code you use that. Since you're a BBT member, he gives you a good deal and gives you priority on access to him. Blue light special, Mike.
Blue light special. I love it. Well, fantastic. Thank you very much, Thor. And we will, hopefully all of you out there will keep that in mind. And again, if you're watching on YouTube, we are very happy to have you. Hopefully we'll see you in the room at some point soon. Give us a thumbs up and a like. We would appreciate it. So, all right. With that, let's set some levels. We got some time here. We got a couple of tickers that we can set levels against. One thing we didn't talk about this morning so far, there's a couple of tickers that some of us like to watch all the time. I've mentioned to you in the past, I love to watch like Apple and AMD, of course. Tesla is another good one that you can keep an eye on. They just tend to move every day, right? Whether there's a catalyst or not, whether there's news or a specific event, they just tend to move. They get the volume. You can sort of predict what's going to happen. They follow patterns fairly well. So they're just examples. Others we've talked about in the room many times. NVIDIA, some people love Microsoft. I mean, everybody's got their different favorites. There's nothing wrong with any of them. You do you. But keep an eye on those today. I expect we're going to see a lot of market following. So, overall, we've got the SPY. Right? Oh, whoops! I just ruined my list here. Hold on. The SPY and the Qs. Which started gapping down, moving up a little bit so far pre-market. So we'll see what they do, but I expect sort of Apple and AMD to follow. Look at how this daily trend on Apple so far. Can you tell the difference between that and SPY? See, Apple, SPY, AMD, SPY. Looks the same, right? Anyways, so that happens quite a bit when you get days like this. All right, so let's go to the things that are gapping, and we'll set some levels on it. Starting with LVS, which still doesn't have great pre-market action, but I do see a settlement candle, this 8 a.m. settlement candle. And with Thor, this is a perfect time for me to mention here once again, this is what we lovingly call the tin foil line, which really sort of Thor coined, because at 8 a.m. you often get a settlement of previous day accounts or overnight orders. And you can see this is a perfect example on LVS. Small body, big wicks can sometimes, not always, but sometimes set a range for trading in which it'll sort of pay attention to these limits over the course of the trading day. So far pre-market, LVS actually doing a good job of trading within that settlement candle. So you can see we're between those lines as we're trading here. Whether that continues to prove to be boundary conditions once the market's open, you never know. But it's always good to keep an eye on it just in case. With this gapping up this morning, I'm expecting it to move higher. You can see at some point in the past, I already set a daily level at $40.33. I still think that's a good level. I'm going to leave that there. But I want one in between. So I see here we got a tops of a few candles hitting in different months previously. So I'm going to set a level here at 39, let's just see what we got here. 39.80, 39.81. That is pretty precise there. So I'm going to put this right at 39.80. I think that's a level to watch if we continue to rise. Now that would be a $2 rise, so it'd have to double how far it's gone. Can we? Yes. Will we? No idea, but we'll wait and see. Netflix, again, pre-market action doesn't look good, but Thor mentioned it, so we'll take a look at it. Gapping down here just marginally so far this morning on low volume. Friday, I should say, Friday's high and low are good bracket ranges for it right now, especially that low level. So keep an eye on it. We'll see if those come into play this morning. If it does and it hits one of those, then I'll worry about setting other levels. Otherwise, this could end up being an inside day, meaning that it'll be trading within the range that it's set on Friday. We'll see on Netflix. XPEV is the next on our list. Been trending. Look at this steady trend down for the last several months. However, we saw a little bit. It gapped down on Friday, bounced back up, and we're continuing that upward movement so far this morning. One of the few that's showing green this morning, so might be worth keeping an eye on that. Now, the high of 2 days ago over here, this would be Thursday's high, 1460, already on my chart. Good place to watch. We'll see if that comes into play. I can see one of these settlement candles sitting here on XPEV, so I'll just set the limits. Notice how this upper limit of that 8 a.m. candle is setting sort of a lower bound for the price action over the last 20 minutes. So we'll see what that does. But that's pretty much all I'm going to watch for now. If we break out of that high from 2 days ago, then I'll worry about setting more levels higher on XPEV. LI is trending in a very tight range here. Look how it has done, very little over the last couple of days. Sort of just, sort of bouncing in this area. So that gives me some highs and lows of the previous few days to look at. We are, sort of mid-range in that, just slightly below where it closed on Friday. So once again, you know what? I think I'm just going to leave it here. I mean, this low here, by the way, I could mark just so that I'm aware of it. Down here on the 21st of September, it's a low of 2290, so my level at 2293 is good, and we'll see what happens on LI. That brings me to my secondary list. We'll see if I want to set some levels and stuff. CRHC, which I still look at this. Like, the price action has completely dropped off this. Does not look good at all. In fact, I'm just going to take it off my list. It does not look good. I wouldn't even recommend anyone consider trading that. JD, while it's not moving and its pre-market doesn't look good at all, it can often sort of take off once the market opens. This could be one of those days as it's sitting down here at a low level and could very well bounce. But I do have the highs and lows of the previous 2 days, which gives me some areas to look at. You can see on my chart, I've already got 5650, which I've got marked because where it sort of bounced off previously. So I like that as a level. I'm just going to leave that. Something to watch on JD. Farfetch Limited, FTCH, pre-market action is not getting any better. In fact, the volume is actually getting lower. Look at this, only 400, 600 shares. Don't like it. Taking it off my list. LYFT, Lift is moving up actually here pre-market. Despite the fact that it's gapping down, it's moving up. It's now above the VWAP. So I don't know where this is going to go this morning. So maybe we should set some levels on this. I'm going to put one down here where I can see sort of the bounce happened back in late August around 1247. So that's a place to look at. And on the top side, we've got a tiny little gap between the candles from a couple of days ago. So we'll see if it fills that. Again, I've already got those levels marked. Yeah, that's probably about it for now. We'll see what happens to Lyft. Uber was on here, just sort of a sympathy play against the news we had on Lyft. It's sitting at the low end of the range. I like that because if we do see weakness, like we mentioned, there's this big gap here. So I'm going to mark the high of this, which is 2710. sorry, well, I guess the low of that candle, but high of the gap, and the low of the gap and the high of the candle here, which is 24.62. Easy for me to say, right? So that gives me the boundary conditions on this. If we get into this gap area, right, almost a $3 range, $2.60 range, we could see some rapid price action as it moves sort of to sort of get through that gap area. So that's it for Uber, and we'll see what happens there. All right. If you have anything else you'd like to look at, either on YouTube or in the room, let me know. Now's the time when I can take a look at it. So while I'm doing that, I see a couple people mentioning that they're having challenges connecting to DAS. You know, I had the quote server unable to connect thing this morning once, and then it worked fine and it connected. As Thor is pointing out, there's if you go into, let's see if I can pop this out. If you go into the data stream mode, you'll get a window that looks like this. Hit switch quote server, and then you'll get a window like this where you can then pick whichever quote server you want to connect to and try and connect to another one. You can see that mine are all available in green. So far, the system, after that initial connection item, it's been just working fine for me. But that's how you use that software platform if you're using DAS Trader Pro to trade. But there you go. Tallness is suggesting Bubba, so let's take a look at Bubba. It can sometimes move here. Bubba or Baba. Anyways, B-A-B-A, however you want to pronounce it. Bounced off a low here on Friday, moving up slightly on 300,000 share volume, which I think is pretty normal for it. Don't forget this is dual listed, so it often gets sort of volume after hours, and then during the market. I personally, Baba and I don't get along. I'm not sure why. I've never traded well against it, but if you like it, yeah, it looks like there could be some opportunity this morning. I mean, it's not fantastic pre-market, but that doesn't usually dictate what the price action looks like once it opens. So I would watch the high end of this level. The high of 2 days ago here at 83.28, definitely an area to watch. And then Friday's low. I keep saying yesterday, but Friday's low at 77.60 is be on the low side. So that's what I would watch if you like that ticker. All right, so all that being said, what else we got? Neo, Andrew O on YouTube mentioning Neo. Yeah, Neo, well, it's usual pre-market volume, right? It gets a little more volume pre-market and it tends to move. So here we've got 730,000 shares moving, not bad so far. Some of these candles, you can see they're a little stunted. This looks like the computers are trading a lot of this volume. Not particularly a bad thing on a stock ticker like NEO. It is a New York Stock Exchange stock, although it trades much more like a NASDAQ stock. So, but I do like NEO often once the market opens. It looks okay this morning. The daily, it's not particularly close to a range where I think it's necessarily going to break out of anything. But it's one of those ones that actually is relatively good to watch on any given day because it can give you some moves to trade against. So yeah, not a bad ticker to pick. Someone's mentioning my settlement candle or the tinfoil line at 8 o'clock looks a little weird. It does look a little weird. 47,000 shares at that point. I mean, really, it just had no body, right? So it looked, that would generally tell me, what happened? It opened, it traded one block of shares up at the top here, and then ended up just right back where it started. So, that probably is what happened here. Was essentially it was trading at a single price. Somebody put in a block trade, right, a settlement from overnight or something at that level, and then it moved right back down to the point at which it was moving at before to fill out the regular listed orders on the book. So, yeah, I know, Mike Kerr. I struggle to say that properly, I guess, but Baba. Anyways. All right, LVTX, people are still mentioning. That's right, we did look at that. Let me come back to this. Let's take a peek at LVTX. Still getting some volume in price action. We're up over 5.9 million shares. I mean, that is huge, right? Look at its normal daily volume here. Normal daily volume is 1,000 shares. 1,000. Today it's got 5.9 million. So it's definitely in the sights of a bunch of meme stock traders, or the, just it's sort of the stock of the day that jumps here. Remember, the float's only 9 million shares. So essentially it's turned over like 60% of its float theoretically already. So this thing could take off when the market opens, but it could also drop heavily. So very dangerous stock. Again, something I'm not really going to touch, but if you're watching it, then I would just first warrant caution. Secondly, whole dollar numbers, like I mentioned before, the place to look. Up here, there might be an area of resistance around $6.80. You can see it spiked up there back in February, so it might be something to take a look at. It's right at a level pretty much right now where it sort of bounced off of earlier back in January. Other than that, sort of this is at the whim of the sort of the short-term daily traders that are going to take this somewhere or abandon it, right? Which happens as well. Sometimes they abandon it and it just, everybody sort of moves out of the stock and it just starts to drop. So, who knows? When the opening bell rings, anything could happen on this. Be cautious if you're going to watch it. Personally, I'm not. There's other things to take a look at, and I will focus there. So let's see what we've got in the room. We're pretty much at time where we normally look at what our moderators are posting. And do I have any moderators posts? I think our moderators are all still asleep on this Monday morning. Thor, have you decided yet what you might focus on once the markets open?
So yeah, for me, I'm probably going to keep an eye on the ETFs to see how those start out today. I really like the volume that SPY picked up off of S5 on the daily last week. For those of you who are Camarilla pivot traders like I am, S5 on the SPY was 363.21 yesterday, and our low on the day was 363.29. So got within a few pennies, not bad. But we picked up a lot of extra volume and hit a hammer there. So I'm going to be watching the ETFs. I think we'll probably open fairly choppy because we're in kind of a low-end buy range, and then see if we can get maybe a squeeze going on later in the day. But I kind of think we might have some action kind of like you talked about last week, which is going to be a little complicated, which is I think the market's going to shake out a little bit each morning, then kind of pick directions versus just going on big runs right out of the open. So it's going to make momentum trading a little trickier because you're going to have to be patient, which is not generically something momentum traders are known for. So just keep that in mind. That right now the SPY's order book and the Q's order book both looks very balanced. So it's no clear in direction as far as all that goes. So I'm going to watch that, and then I'm going to throw on some of these China stocks, LI, XPEV. And I'm going to watch LVS and WIN, even though I don't have volume on those yet, just to see if something pops up. After that, I'm just going to pay attention to my good old buddy scanner. For those of you who haven't used it, BBT in the room here has the Pivot Alert Bot, which is our little pivot scanner that tells me when cool stuff is happening. And right now, the Alert Bot has already picked out a couple of potential options, which is AMC and XPEV. So we might be keeping an eye on that one as well.
There you go. So, we're pretty much at time here, everyone. I just did a quick check, as expected, for a Monday. No IPOs and no SPACs to announce, so it doesn't look like we're getting any new offerings today. Not surprised by that. So whatever you choose to watch, just be careful. Take it easy. We got to see where these markets are going to go this week. We did have sort of a very interesting and eventful week last week, so let's just see where it goes. If you've got a trade off the open, then by all means take it, but don't force anything. I find that my best days are when I just take it slow and see what the market brings. Let me just quickly, as we're closing out here, I got a couple of pick lists going in here from our moderators. So in addition to what Thor mentioned for his, Brian is going to be looking at LVS as well, RBLX, which we didn't take a look at, NEO, JD, and the TQQQ. And Megan, always keeping it tight here, is NVIDIA and Google. So that's what she's watching. So with that, have a great week, everybody. Have a fantastic trading week and a good week outside of trading. That's what I'm trying to say. There's my alarm telling me we're 10 minutes to the open, and that's my curtain call. So Thor, thanks so much for joining this morning and sitting in for Norm.
My pleasure, good sir.
And we will talk to all of you friends out on YouTube later. Well, again, tomorrow morning. Again, thumbs up are appreciated. And for everybody in the room, we'll be talking to you in just a couple of seconds. Take care, everyone.